Those are some of the top stories we're filing at this hour. But let's get into our conversation for the day. Imagine losing 17 trillion naira, enough to build several state-of-the-art hospitals in just 5 years. Well, that's the staggering figure Nigeria might have forfeited to tax waivers granted to select corporations. Well, the Senate Committee on Finance has raised the alarm, urging the government to reconsider this practice, highlighting its impact on national revenue. But the debate goes beyond lost numbers, and it takes a closer look at questions of fairness, economic priorities, and the very structure of the administration of tax waivers and incentives in Nigeria. But what is the implication should the federal government proceed to stop the practice of waivers and incentives? Well, that's the big question for the day. To discuss this, I'm joined by the Senior Manager, Commercial Practice Group at Anderson, Nigeria, Mr. Vincent Okukone. He joins me live in the studio here now. Thank you for joining me. And of course, it's good to be here. Your first time on the show here. Let's get into the conversation. Let's get started with your overview. Just give us an overview of the industry, the tax administration in Nigeria. How effective, how impactful has it been on the economy? Because if you look at what the Senate is saying that the country lost about 17 trillion naira to tax waivers and incentives in the country. So it means that that has gone into the economy. So give us your overview.
All right, thank you very much, Frank. So just a quick background. Of course, the concept of tax incentives and waivers is not a new one. And then the primary objective, of granting tax waivers and incentives is to stimulate development in identified sectors of the economy, such sectors that the government feels need some sort of protection, and then the idea is not to burden them with, compliance requirements, especially when it comes to paying taxes, because the government wants them to grow and then see some development before they start. They have to start thinking about paying taxes. In terms of incentives, typically I think I would like to talk about some very common ones, like the Pioneer Status Incentive, the PSI. Of course, the PSI is available to to several industries and products that are identified, and the government feels these industries need some sort of protection and development. And the NIPC, the Investment Promotion Commission, administers looks at all of those, criteria for qualification for PSI. One of such is that a business has to make a presentation and present a business case analysis, which should demonstrate how such a business venture, if it's a new business that the person wants to go into, how it will contribute positively to the economy. Of course, the idea then is that because it's a pioneer industry, because it's a pioneer business, you are then exempted from tax for the first 3 years in the first instance, and then that can be extended for up to 2 years. But the point is, this incentive is not just granted in arbitrarily. There are laid down conditions that have to be followed, that have to be met before the incentive is granted to such an applicant. In terms of administration on the part of FIS, for example, specifically there's an FIS office, the Tax Incentives Management Audit, which has the primary responsibility of reviewing the activities of companies that have enjoyed some sort of incentive in the past, and then they're able to look at the records and the activities of such businesses during the period when they were enjoying this incentive, and then where there are adjustments that need to be made in terms of maybe profits that were realized within the pioneer period, or assets that were acquired within that period for the purpose of claiming capital allowance. So that office reviews and ensures that the right things have been done even after enjoying those incentives. And where where there's a need to then make an adjustment, the FIS would then propose an adjustment by way of, and that could lead to additional liabilities.
Because if you look at what the Senate is saying now, that the government must stop this scheme immediately because it has cost the country. So it means that there could be something wrong with the process, just like what you say. Because if the reason was to stimulate the economy in the first place, why now? So the question is, what's your understanding of this development, this request by the Senate, And why do you think this is necessary at this time?
Okay, so going back to the objective of granting incentives, I see it as a way of, I see it as an investment on the part of the government to say, I'm not going to ask you to pay taxes for this number of years because I want you to, I think you need protection and I want you to stabilize and make enough profit before I then start taxing you. So that's some sort of, an investment on the part of the government to say, okay,
that's right.
I'm making an investment. I am, quote unquote, losing money, for this number of years because I want to see you grow. I want to see players in this industry grow. And then by the time you start making, what I call sufficient, profits, I can then come after you to tax. Now, of course, that's the fact that it's an investment means, government losing some money. But then you need to also look at the other side of the argument, which is the fact that because I'm granting incentives to, peculiar industries or peculiar businesses, I'm also expanding the tax net. I'll give you an instance. When Waivers was introduced in 2017, it was reported that, as a result of the voluntary compliance where businesses declared their, assets and income that were previously undeclared, the tax base grew by from 14 million to about 19 million. Whether that was directly connected with the Waivers incentive remains to be seen, but the point is that that's one of the benefits that could arise from granting incentives, where participants who come forward willingly to enjoy or to take part in those benefits, because the government has made an investment, and then the onus is then on those businesses or taxpayers to then ensure compliance on a going forward basis. And when you achieve voluntary compliance on the part of taxpayers, that helps in broadening the tax net, and then ultimately in future it can also increase the gains that the government can get by way of tax revenue. Now, going back to the 17 trillion that has been reported as losses that the government has suffered as
that's a lot of money. You
as
can
a lot
use
of
to
waivers.
build hospitals, develop infrastructure and all of that across the state of the federation.
But again, you need to look at the bright side, the other side, which is the investment the government has made, the development it has brought about in specific industries. For example, the road infrastructure tax credit scheme, where taxpayers were allowed to more or less determine how their taxes were spent. So a business has, there's a road that leads to my factory, for example, and the road is in poor conditions. What the government then did was to say, because I do not have enough funds to build all of the roads, what if you go ahead and build the road yourself with your money, and then in exchange I would grant you tax credit against your income tax that you would have paid. So essentially was saying, it's like saying I'm giving the powers to taxpayers to determine how taxes should be spent. In that regard, where taxpayers have then gone ahead to fix or build or repair what they call eligible roads that affect their businesses, you then have a multiplier effect where the road has been fixed or the road has been built. It brings about commercial activities in that area, there's creation of jobs, and then ultimately it's a win-win situation for both the government and the taxpayer.
The question would be, how do you evaluate the value of that infrastructure? For instance, road, for example, if you construct a road leading to your farm, so how do you evaluate it? Who gives the value for that infrastructure that was constructed? Perhaps this is where, again, we have to look at reviewing the kind of incentives or waivers that perhaps who is going to value that?
Okay, so with the road infrastructure tax credit scheme, as you would imagine with government processes, there's a lot of administrative steps that need to be taken. For example, the Federal Ministry of Finance is involved, the Federal Ministry of Works is also involved, and it's not like taxpayers or businesses should just go ahead and start constructing or repairing roads, for instance, right? Before you embark on such a project, you have to first make an application, in writing to a special committee to say, I want to fix this, peculiar road. And if that road was not previously on the list of eligible roads, that road has to then be approved to say, okay, you can go ahead and fix this road subject to certain conditions. Part of those conditions will be making a presentation, you have to get engineers and builders involved to estimate the project cost of all of those. So those project costs are also subject to review and approval, on the part of the Ministry of Finance, the Federal Ministry of Works and Housing, and also the Bureau of Public Procurement. It is after you get all of those approvals that you can then go ahead, to construct or repair those roads. So before the construction happens, before you even lay a block, there's already an agreement in terms of, what the project cost should be and how much you should expend on that road. And that also gives you an idea of what to expect, in terms of tax credits with respect to your income tax. Just to quickly mention that with the RITC, a lot of, companies applied to participate in the scheme, but if you look at the success rate, only very few companies got final approval, from the last administration. So perhaps that's one area to look at in terms of, perhaps speeding up the process of getting approvals for those roads, so that participants can, fully benefit from those schemes.
Because this number, if you look at it, is spanned across 5 years, which means that it's not happening in this administration. So if you were to recommend, so in terms of reviewing tax waivers and incentives in this administration, what would your recommendation be to what sector needs to enjoy? Because it would seem that these tax waivers largely enjoyed by large corporations. We don't have businesses, perhaps. I'm just saying, because I don't have data to that, but I'm saying that it's largely enjoyed by most large corporations.
So it depends. There are different kinds of incentives that are, applicable as of today. For example, small companies are exempt from paying income tax. That's if you have a turnover of less than 25 million naira. Of course, for the bigger projects that will be, capital intensive, you will expect that only the large companies can undertake, such. But in terms of, reviewing and making the process better, I would say there's a need to restore confidence, of taxpayers, in the government and also in the administration. So one of such would be to, ensure. I think to a very large extent, the time frame, from application to getting final approval to go ahead or to start enjoying those benefits. I think that can come down a little, because if I make a projection to say I'm going to need to get this incentive, in a year's time, and I make the application today, perhaps there's no guarantee that I would get that, approval to begin to enjoy that incentive within 12 months.
Right.
So there are instances where it takes up, more than 12 months, and then that disrupts my business plan. So in terms of, overall, I would like to see, better administration. I would like to mention also that for those that got some of these incentives, perhaps with the last administration, they should be, allowed to enjoy those incentives, as that would also restore confidence in the system on the part of taxpayers.
Should the federal government, proceed or goes ahead to say, okay, let's review these and withdraw these incentives and waivers to these corporations, what would be the implication? Because I know that currently there's a fiscal presidential committee on fiscal reforms, and tax reforms and fiscal policies and all of that. And of course, one of those, the position is that they want to harmonize and ensure that they bring more people into the tax net. And of course, with about, I think, about $18 trillion in the next 10 years or so. I don't have the figure now, but because of the drive, to raise revenue, I also read that the FRA is also projected to raise about 19 trillion naira in the 2024 fiscal year. So these, of course, are target and all of that. So how do you avoid gagging the businesses who are just surviving? And of course, to also look at what you're doing to meet up with the objectives of this administration.
I agree that's a delicate dance, and I would say that the target of the FRS is perhaps an ambitious one, but...
you think it's not realistic?
No, if you look at their performance over the years, I think last year they got about 11 or 12 trillion. So I'd say it's ambitious, but it's not unattainable, right? And then in terms of, some of the developments that have happened, if you look at the Finance Act 2023, for instance, investment allowance that used to be available at 10%, on the cost of additions to items of plant and equipment has since been withdrawn. So what that means that incentive is no longer available to companies. And the implication is that by the time you withdraw that incentive, it increases your accessible profits and total profits, and ultimately, your tax payable. But I agree that there's need to find a balance, because you find out that in recent times and practices, there've been instances of overburdening the businesses that are even complying with paying taxes, while some perhaps have never received a letter from the tax authority. So I agree that there's a need to balance that. Even going back to the incentives, there might be instances of abuse. I would consider there might be instances of abuse where perhaps a company has gotten some incentive for a particular activity or product, and then it goes ahead to manufacture or produce something entirely different. Yes, those challenges are there, but I think they can be addressed. They can be addressed by proper administration, and finding a balance between raising tax revenues and also ensuring that businesses continue to thrive, even amidst challenging economic realities. So I know one of the considerations, is reducing the number of taxes payable by businesses. So you want to look at the multiplicity of taxes. I think currently there are about 60 different taxes or thereabouts.
About 62 thereabouts.
All of the taxes collectible by the federal and down to the local government commissions. I mean, if you're able to reduce that to about 9 or 10, that would be music to the ears.
Well, that's what the chairman of the Presidential Committee on Fiscal Policy and Tax Reform, Mr. Taiwo Oyedele. I don't know if you've seen that report. Part of his position is to harmonize, all of the taxes into 10. And so, how do you think that report aligned with the broader objective of these, economic objectives of this administration? And of course, give us your recommendations. What do you think the present administration needs to do to ensure that it encourage, business growth and of course to stimulate economic growth as well?
Yeah, thanks. In terms of harmonizing the different taxes, of course, you need to look at the tax basis because different taxes have different bases, meaning what do you apply the tax on? So where you have taxes that have the same or similar basis, it's easier to group them into one bucket and then apply a single rate on all of those taxes. But typically taxes are based on profits or income or capital gains, as the case may be. So where you have taxes with the same or similar basis, it's easier to group all of those into one bucket and then apply a single rate across board. So that can be achieved, if you look at all of the 60 or thereabout number of taxes, and then you find, common basis or common, basis of assessment, you can easily then group those and apply a single rate. Now, in terms of, the overall economic objective and drive, there's no pretense that the country needs a lot of money, to come in to, fund the budget, to run the administration. There's no doubt about that. Right? And of course, you're looking at taxes, raising taxes to ensure that that is achieved. But then, how do you raise taxes? Do you want to go back to the same people you've been, subjecting to tax, or do you want to, expand the tax net and bring in, new taxpayers that perhaps were not paying taxes before now, or were not paying as much, as they should? Which is why the FRS, for example, or even the state IRSs have, the tool of, tax audits and reviews, to ensure that they verify the records or the taxes paid and filed by taxpayers to ensure that they've paid the right amount of taxes. But I think it's an interesting development, and I'm positive and hopeful. I have a positive outlook towards how this is going to pan out, and I have no doubt that soon enough we'll get to El Dorado.
Just before I let you go, I mean, you spoke earlier about how 19 trillion naira is too ambitious for the FIRS, to achieve. So how do you then, diversify? What kind of diversification would you want to see in this administration to lessen dependence on few resources that we have and to create a more resilient system? Before I let you go.
Well, okay, thanks. So if you look at our national tax policy, it recommends that focus should be on indirect taxes rather than direct taxes. Indirect taxes will typically then apply on transactions. You talk about value-added tax, you talk about, stamp duties, you talk about, other duties and levies, as the case may be. The truth of the matter is that there are transactions that perhaps, I know the FIS or the tax authorities are not privy to, but there's also been a lot of developments in that space in terms of, identifying digital transactions and being able to apply taxes on them. Of course, you have various multilateral agreements, like the automatic exchange of information, that have been signed by different competent authorities of different jurisdictions, which Nigeria is a signatory to. You have all of those, avenues to, get information automatically to be able to evaluate taxes that are due, on such transactions. I would give kudos to the FRS and tax authorities in general for the developments. There's use of technology to ensure that you capture those transactions on real time and to ensure that the parties to those transactions pay the right amount of taxes. So a lot has been happening in the tax space in terms of development. Investment has also been made with respect to taxpayer education, and to also encourage voluntary compliance. And the catch then is that where you have voluntary compliance on the part of taxpayers, it will mean that ultimately the tax authority has to expend less resources, in chasing after defaulters, because you have a lower number of defaulters in that instance. And then by the time you have that, you have an ideal situation. It will also be good, on the part of taxpayers to restore, the trust they have in the system, where perhaps a business may think, oh, I want to see my taxes working for me, So where you have that, that handshake, that synergy between the administrator and the taxpayer, it creates a win-win situation for both parties.
I think we'll just have to leave it there. Thank you so much for your time, Senior Manager, Commercial Practice Group at Analysing Nigeria, Mr. Vincent Okokone. Thank you for coming on Business Nigeria.
Thank you very much.
I think great stuff there, but we have to just leave it